Hi everyone, welcome to another video by Optionables. In this video, first we'll be looking at what happened to the markets on Friday, and later we'll be discussing certain trade ideas and the market outlook for next week. If you look at the market on Friday, the market gapped up close to around 130-140 points. So after it gapped up, it traded and consolidated throughout the day around the range of 15,700. So throughout the day, it was consolidating in this range of 15,700. So why is this 15,700 level so important for the market? So now, when we actually look at the same thing from a larger time frame, so let's put a 1 hour chart here. So when I put a 1 hour chart here, so you can see that multiple times earlier, Nifty had taken good support at 15,700. As we can see, whenever Nifty has tested 15,700, there is immediately a bounce back. And not just that, so markets came down, again retested 15,700, couldn't cross 15,700, and it had fallen back again. And here again we are retesting 15,700. And that's the reason 15,700 is such a crucial level for the market. So now when we actually look at the institutional activity on Friday, we can see that DIIs again ended up purchasing close to around 2000 crores. FII again sold close to around 2300 crores. So this has been something very common what we are witnessing. FIIs are continuously selling and DIIs are continuously buying. So this is nothing new. But when we look at the top gainers as well as losers, so you can see that there were totally 40 stocks which went up and 11 stocks which declined in Nifty. And among the ones which went up, it was mostly auto, banks and FMCG. So we can see that Hero, M&M, IndusInd Bank, Hindustan Unilever, ICICI Bank, Britannia. So it's auto, finance and FMCG. These three were the top sectors which led the Nifty higher. And on the losing end, we had the IT sector. So mainly from the IT sector, so Tech Chem, Infi, TCS, HCL. So all this pulled down the Nifty. One good thing is whenever there was any sell-off in the market, immediately it was bought into. So for example, the market went higher, came down, immediately there was buying here which led the market higher. And then even though there was selling here, immediately we saw some buying here, and again we saw some buying here. So this is a very positive thing for the market. And not just this, apart from this, we also had very strong global cues which supported Nifty. And after Nifty closed, even the European markets and the US markets almost ended around 2 to 3% higher. And SGX Nifty is right now suggesting a gap up of close to around 150 points. So in case, let's say tomorrow we end up opening around 100 to 150 points gap up, which is very likely to happen depending on how the US markets closed. So let's take a little broader picture into perspective. So again, when we look at the daily chart, we get to see why this 15,700 level is so important, right? So tomorrow, assuming that we'll be opening around 100-150 points higher, that is somewhere around this level, and in case if we are able to hold 15,700 on a closing basis, that means tomorrow we'll be opening around 15,800, 850 and so on. And if we are able to hold 15,700 on a closing basis, then very likely we will retest 16,000 levels. With a gap up, if we are able to sustain above 15,700 throughout the day, then very likely we'll be retesting 16,000 levels. So this is the market view what I am currently working with. So we know that there is likely to be a gap up tomorrow, and that's the reason I am slightly having a bullish opinion on the market, given the fact that the global cues are also turning positive. Most of the news, whether be it inflation or Russia-Ukraine war, most of it has already been priced in. So even when we look at the open interest perspective, so let me just open the open interest here. So you can see that there is some good amount of short straddles being created at 15,700, and at lower end we have some good support coming in at 15,500, and here we have some resistance at 16,000. So the put call ratio is also suggesting 1. That means right now there is no bias. Neither the participants are expecting a bullish move or a bearish move. But one thing what we have to keep in mind is this can change anytime. So tomorrow if there's a gap up and if there's very strong put writing and a follow up buying, then definitely the PCR ratio is also going to change and the entire market is also going to become more bullish. With this perspective, we are going to discuss one trade idea which we will be implementing tomorrow. So this trade idea is going to be in Bank Nifty. So when I open the Bank Nifty chart, it is quite evident that this particular level of 33,750 or 33,800 is very crucial. Why? Because the market has taken multiple resistance over here. So it tried to break on a 15-minute chart, it was not possible. Again it tried to break here, it was not possible. And again it tried to break here, it was not possible. And hence, for this reason alone, in case if we are seeing a close above 33,700 or 33,750, in case if the market is closing above 33,750, because as I told you, we are expecting a gap up. Let's say we open above 33,750 and end above 33,750, then we are going to do a bull put spread. So I'm going to show what the trade is. So what is a bull put spread? So bull put spread is basically a bullish trade where you will end up shorting a in the money put. When I say in the money, relatively in the money put, and you will end up buying a relatively out of money put. So for example, we will be shorting 33,700 put and buying a 33,600 put. So the thing is here, if we are opening say around 200 points gap up, so these will not be the likely prices. So the prices might be something like 280 and this might be trading somewhere around 240. So this will be the most likely prices what we'll be getting this at, and this is how the trade is going to look like. Assuming this is going to be the approximate price what we are going to get, so then our break even is going to come at 33,660. So this is well below 33,750, which is actually the level what we are looking for. Here, what we would be looking for is to risk around 0.3% of our capital. So when I say 0.3% of our capital, that is going to come to around 1.5 lakh. So in the worst case, if everything goes wrong, we want to just lose around 1.5 lakh. And for the same reason, we will be entering close to around 100 lots of the same. So in case if we end up making profit, we'll make 1 lakh. In case if we end up losing, we will lose 1.5 lakh. But the thing is, since we have some technical perspective to this, assuming that markets are going to open above and end above 33,750, most likely the markets can remain bullish for this particular week, right? So this is the idea what we have. And apart from this, we do also have a lot of bullish positions in the market. So let me just show you that. So these are the positions what we have. So you can just ignore this M2M as well as the Nifty and Bank Nifty prices here because there was mock trading going on, and hence there will be a lot of price disparity. So there will be some random prices what would have been generated, right? So when we look at the positions alone, you can see that we already have quite a lot of future positions. So as Nifty, Bank Nifty started falling, we started adding a lot of futures. So we have Pidilite, Mindtree, Kotak, Bajaj Finance and Asian Paints futures long. Apart from that, you can also see that we have a 32,500 and 34,500 short strangle. Along with that, we have a 32,500 naked put short. So here also we have another ratio spread which is again bullish in Bank Nifty July 28th expiry, and again Nifty July 28th expiry we again have a ratio spread which is again a bullish trade. Overall, as of now, we have a lot of bullish positions, and in case if the market is going to open higher, then we'll take up one more bullish position and then we'll see how the things go from there. So with this, we also come to the end of this video, and if you have liked the video, then do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.